Hey everybody, today is Monday, January 26, 2026. It's Luther Wilson III here, real estate extraordinaire, representing for Upside Property Services and the affiliate companies. We're here in the Kansas City market, moving and shaking. On this channel, I talk mostly about capital, strategy, and operations as it pertains to investing in real estate. And part of my goal is to educate, inspire, and maybe someday collaborate with some of you who are listening and or watching. So I appreciate you tuning in. On today's session, I'm going to talk about 3 of the biggest or most common expectations from real estate investors. Okay, so throughout my career as a real estate practitioner, a majority of my clients have been real estate investors. And for the most part, I end up connecting with them after they have already started their real estate investing venture. And a lot of my clients are from out of state. And for a number of reasons, Kansas City has been a very attractive market for real estate investors. And I think one of the biggest reasons is that we have been able to get properties relatively cheap compared to other parts of the country. And then on top of that, our rental rates compared to what it costs to get into a property has been pretty good. So I've worked with investors from California, Colorado, Canada, Texas, Florida, Nevada, and the list goes on. And so again, most of the time I didn't really get plugged in with them until they had already purchased property in the Kansas City market, or some of them have already purchased or had already purchased property in a different state. And so they got involved usually with, it might have been a wholesaler doing an off-market deal, it might have been a real estate broker and a property manager, and then inevitably they get involved with some type of contractor throughout that process. And so, I don't know the exact number, but I think since 08, 09, I've worked with over 100 investors in one way or another. And some of those investors, I was able to connect with them before they purchased their first investment property in the Kansas City market. And when that happened, we were able to push through and succeed more often than not. And again, for the out-of-state investors who I was able to assist, and they had already been in the mix, it seemed like me and my team and my colleagues, us as service providers, had to go in and either correct or undo some stuff, right? And I've heard some of the same stories or about some of the same situations, as you can imagine, over and over and over again. And part of that is my parents. Some of y'all know my background. I grew up in the real estate space. My mom's been a realtor for 33 years. My dad's been investing in real estate for 35 years. And both of them had worked with real estate investors and still do to this day work with real estate investors, and they used to manage properties, and the list goes on. And so the stories that I heard as a kid started to come to life once I graduated college, started doing my own deals, and started serving other investors. I started to experience some of those stories, and I, became some of those stories. And a lot of it, in my previous videos, I talk about the capital heavily, the last couple years especially. And that's definitely important. Of course, the strategy and the operations is critical. Having all 3 of those pillars lined up, working, efficiently is critical. But I thought about it and I was like, well, not just those things. A lot of it has to do with our expectations, or my client or customer's expectations, before they even get involved with me or whoever they got involved with, right? What in our head, or what in their head is going on, or what is the thought process as they are, as we are, as you are exploring real estate investing opportunities, and where did we get that from? Okay, we may have heard it from we may have read it in a book, we may have heard it from a real estate coach or guru, or we may have got that information from someone who is trying to sell us some type of product or service, or somebody who's trying to sell us the property, right? And so I thought about it over and over again, and I finally wanted to do a video about it, so here we are. The top 3 expectations that I have seen from real estate investors. And this is in no particular order, and this is just a short list. I think these are 3 of the biggest ones, and I'll talk about each one a little bit. And I may end up doing another video talking about some of the other assumptions or expectations around real estate investing, and I may even get into how we can combat that, or how we can go in with more realistic expectations and understanding, a better understanding of how real estate investing really goes. Because I just talked to so many investors, and for whatever reason, they thought that it was going to go a lot smoother than it really did. And again, we had to go fix some stuff, right? So the first one on my list, okay, one of the biggest expectations or assumptions that I've seen is that the lender will pay for the full purchase and cover all of the renovation costs on that investment property, okay? I, again, have worked different facets of the real estate business, and I noticed this more as I started talking about funding and financing, and I partnered with a real estate, or a mortgage broker rather, and we started assisting other investors with their funding and financing, and having an understanding of what is a private lender, who is a mortgage broker, okay, and then what is the lending company, right? There's different types of loans that you can get for real estate investing. But if you've been tuned in, I've talked about the capital and what I, refer to as the gap funds, the money that's going to be needed to fill the gaps where the lender doesn't come in. All right, so that's the one of the first ones, right? The second one, right? The second big assumption or expectation is that renovation projects will stay on time and be within the budget. Okay, so this is a big one, because a lot of investors, right, they're either wanting to rehab and resell, aka fix and flip, or they want to rehab and refi, also known as the BRRRR strategy. Okay, they either want to do the in and out, right, or they want to do the buy and hold. And time again, with my own projects and the projects that I've done or oversaw for a client, virtually every single time we go over budget. And I give an example. I have a buddy, he's here in the Kansas City market. He's a general contractor. He's also a real estate investor. He's done over 2,000 projects, and he has over 100 investment properties right now. And I had a conversation with him over a year ago about some of the projects that I was going through, and I wanted his expertise or opinion on things, thinking that, maybe I'm doing something wrong with my operations, or maybe I'm not running the numbers appropriately, or whatever the case may be. And I brought it up to him about how we regularly were going over budget and past the deadline, and if that was a normal thing or something that he experienced. And he quickly said, yes, on virtually all of, at that point, I don't know if he had done definitely over 1,500 projects on virtually every single one of them. They went over, his team, whatever, went over budget and passed the deadline. And, I know he's operating a little bit different now, but I'd love to get some more feedback on that. But that's a big assumption or a big expectation that, and it can add a lot of pressure on yourself as an investor and on your contractor if you are going in with a certain budget and that's it. You might not make it through that process or project successfully. And it might take months, if not a couple years, to figure that out. So that's number two. First one, the lender paying the full purchase and covering all the renovation costs. Number two, renovation projects staying on time and under budget. And the third big expectation that I've seen time and time again from my clients, customers, colleagues, and I've struggled with it too. Well, actually, I don't struggle with it because I have a different strategy, which I'll get into at a later date. Okay, the third one, that rental properties will cash flow, okay? And I have to clarify, because some rental properties will actually cash flow, meaning that you buy the property however you buy it. And more often than not, there's going to be some type of mortgage or long-term debt on the property. Even if you take it over, even if you do seller financing, more often than not, there's some type of mortgage in place. The expectation that a lot of my clients or customers had was that when the rent comes in, right, and then they pay the mortgage, that they'll have some left over, some cash flow from that rental property. And unfortunately, that is just not the case. And in some cases, it might go that way for maybe a short period of time or an extended period of time. But in due time, the rental property is going to have some type of maintenance issue or a major repair need, or simply you paying for the increase in taxes and insurance throughout the months and years. And then also, not to mention the other operating expenses and the biggest thing, one of the biggest things, is property management. So for a lot of landlords, right, we have been able to purchase properties from them and then take what didn't work for them, using our strategy, seller financing, which I've talked about in length in previous videos, we're able to make it cash flow from there. Okay, so that's the third one, that rental properties will cash flow. And I think maybe they will until they don't. And then at some point, the rental property, I guess, I know some investors, they don't care so much about cash flow. They're holding on to the rental and they're paying down the debt. And they, at some point in the future, right, are going to look to either resell and maybe do a 1031 exchange. But their expectation, right? I have a mentor. He does not care about cash flow. His expectation, he goes in knowing that in rare cases, he's going to have cash flow, actual net cash flow from his rental investments, but that's not his objective. He's going in with a different expectation. All right, so those are the top three, right? I'm gonna leave it at that. I know I went a little bit longer than I wanted to, but I think it's important to go through these. And again, I'll probably end up doing a separate video talking about some of the thought process and mindset, and maybe how we or you as an investor can go in and make the process more enjoyable and more effective, efficient, productive, ideally. But before I go, I had to tell a story about a boss that I had years ago. One of the first jobs that I had out of college, I was an exterminator, believe it or not, for about a year and a half. And my boss at the time is a great woman, family friend. I remember going into the office at the end of my shift one day, and she had asked me something, and I tried to explain to her that this, that, and the other happened. And she said something along the lines of, well, you know what happens when you make assumptions, right? And I was like, no, what do you mean? She said, it makes an ASS out of UME, all right? So on that note, I'm gonna wrap it up. Appreciate you tuning in. And you know, if you liked it, subscribe, click the like button, and definitely check out some of the previous videos where I talk about capital, strategy, and operations as it pertains to real estate investing. And again, we're here in the Kansas City market. So if you have a real estate need or know someone who needs assistance with a real estate need or a piece of property looking to buy or sell, or they need some type of assistance with a real estate investment, reach out. All right, take care. Peace, y'all.